What's coming will come, and we'll meet it when it does. US stocks, which were quite bull, plunged again. Friday back to Hibernian, this is Q. On September 3rd, US stock market made a plunge. Dow was once dropping more than 1,000 points. Nasdaq ended with 5% lower. The S&P 500 closed 3% lower. The declines marked the biggest one-day drops for all three indexes since June. The founder of RW Advisory, William, said US markets are facing a potential Minsky moment and a sustainable bull market on the edge of collapse. While the real economy in many states are suffering, the stock market surge in the past month seems irrational and weird, which covered up the realities. The epidemic has not been controlled. Data shows there is no obvious signs of improvement. The economy is in a mess. The GDP in the second quarter set a record in half a century, not to mention protests and disruptions. In such a chaos, you really think the US stock market could be fine. The plunge is not surprising. It just reflected the huge scissors gap between the unreal booming and the depressing real economy. We have seen the US GDP in the second quarter tank 31%, the biggest quarterly plunge. Due to the fast bill printing and QE policies, Fed lowered the outlook of its US government credit rating to negative at the end of July. According to CNBC on September 2nd, huge government spending to fight the coronavirus have added more than $2 trillion to the federal ledger. The federal budget deficit is projected to hit a record $3.3 trillion. This report also criticized the White House a failed national attempt to defeat the pandemic, and then pointed out that debt will exceed annual GDP next year. Under the epidemic, society division and wealth inequality have been more severe. According to Americans for Tax Fairness, the total wealth of US billionaires like Zuckerberg and Bezos grew by over $600 billion since March, a 23% spike in wealth. Uppers making fast money, lowers struggling. Gold for the richer, not the poorer, we call the Matthew effect. The previous booming of the stock market have long since deviated from the fundamentals of the US economy as well as real society. Things turn to opposite when it becomes extreme. As for now, it is time for the bubble to burst, starting from tech stocks. This is Q. Until next time.